technology services and solutions for some of the world's biggest companies. Yep, those ones, and loads more like them. By bringing together the best of technology with our people, we deliver an industry-leading portfolio that spans digital, engineering, cloud, AI, and software. All that good stuff. But it's not just what we do, it's how we do it. We're grounded in what we like to call the art of the possible, which is our poetic way of saying that we make sure you can deploy practical and transformational technology solutions at speed and scale. This is guided by 4 decades of our heritage in engineering. That's a lot of evolving technology. This rich experience helps us to continually adapt and create new tech services and solutions that are fundamentally intelligent, efficient, and business-aligned, delivered by our people who are our true differentiators, not just in numbers, but in their ability to create value beyond the expected. And we have a lot of great people in a lot of different places. They collaborate and co-innovate round the clock, around the world, day in and day out, working for new disruptors, as well as established Global 2000 companies. From financial services and manufacturing to retail and technology, from life sciences and healthcare to telecom and media and more, across every industry. As a partner of choice for these Global 2000 companies, we are consistently recognized by industry analysts for delivering transformative and sustainable business outcomes. We're imaginative and realistic, creative and pragmatic. Most importantly, we're passionate. Passionate about delivering smart solutions that deliver business outcomes. Passionate about cutting costs and the cutting edge. Passionate about our clients, our people, our communities, and our planet. And that's how we're supercharging progress. At HCLTech, we provide technology services and solutions for some of the world's biggest companies. Yep, those ones, and loads more like them. By bringing together the best of technology with our people, we deliver an industry-leading portfolio that spans digital, engineering, cloud, AI, and software. All that good stuff. But it's not just what we do, it's how we do it. We're grounded in what we like to call the art of the possible, which is our poetic way of saying that we make sure you can deploy practical and transformational technology solutions at speed and scale. This is guided by 4 decades of our heritage in engineering. That's a lot of evolving technology. This rich experience helps us to continually adapt and create new tech services and solutions that are fundamentally intelligent, efficient, and business-aligned, delivered by our people who are our true differentiators, not just in numbers, but in their ability to create value beyond the expected. And we have a lot of great people in a lot of different places. They collaborate and co-innovate round the clock, around the world, day in and day out, working for new disruptors, as well as established Global 2000 companies. From financial services and manufacturing to retail and technology, from life sciences and healthcare to telecom and media and more, across every industry. As a partner of choice for these Global 2000 companies, we are consistently recognized by industry analysts for delivering transformative and sustainable business outcomes. We're imaginative and realistic, creative and pragmatic. Most importantly, we're passionate. Passionate about delivering smart solutions that deliver business outcomes. Passionate about cutting costs and the cutting edge. Passionate about our clients, our people, our communities, and our planet. And that's how we're supercharging progress. At HCLTech, we provide technology services and solutions for some of the world's biggest companies. Yep, those ones, and loads more like them. By bringing together the best of technology with our people, we deliver an industry-leading portfolio that spans digital, engineering, cloud, AI, and software. All that good stuff. But it's not just what we do, it's how we do it. We're grounded in what we like to call the art of the possible, which is our poetic way of saying that we make sure you can deploy practical and transformational technology solutions at speed and scale. This is guided by 4 decades of our heritage in engineering. That's a lot of evolving technology. This rich experience helps us to continually adapt and create new tech services and solutions that are fundamentally intelligent, efficient, and business-aligned, delivered by our people who are our true differentiators, not just in numbers, but in their ability to create value beyond the expected. And we have a lot of great people in a lot of different places. They collaborate and co-innovate round the clock around the world, day in and day out, working for new disruptors, as well as established Global 2000 companies. From financial services and manufacturing to retail and technology, from life sciences and healthcare to telecom and media and more, across every industry. As a partner of choice for these Global 2000 companies, we are consistently recognized by industry analysts for delivering transformative and sustainable business outcomes. We're imaginative and realistic, creative and pragmatic. Most importantly, we're passionate. Passionate about delivering smart solutions that deliver business outcomes. Passionate about cutting costs and the cutting edge. Passionate about our clients, our people, our communities, and our planet. And that's how we're supercharging progress. At HCLTech, we provide technology services and solutions for some of the world's biggest companies. Yep, those ones, and loads more like them. By bringing together the best of technology with our people, we deliver an industry-leading portfolio that spans digital, engineering, cloud, AI, and software. All that good stuff. But it's not just what we do, it's how we do it. We're grounded in what we like to call the art of the possible, which is our poetic way of saying that we make sure you can deploy practical and transformational technology solutions at speed and scale. This is guided by 4 decades of our heritage in engineering. That's a lot of evolving technology. This rich experience helps us to continually adapt and create new tech services and solutions that are fundamentally intelligent, efficient, and business-aligned, delivered by our people who are our true differentiators, not just in numbers, but in their ability to create value beyond the expected. And we have a lot of great people in a lot of different places. They collaborate and co-innovate round the clock around the world, day in and day out, working for new disruptors, as well as established Global 2000 companies. From financial services and manufacturing to retail and technology, from life sciences and healthcare to telecom and media and more, across every industry. As a partner of choice for these Global 2000 companies, we are consistently recognized by industry analysts for delivering transformative and sustainable business outcomes. We're imaginative and realistic, creative and pragmatic. Most importantly, we're passionate. Passionate about delivering smart solutions that deliver business outcomes. Passionate about cutting costs and the cutting edge. Passionate about our clients, our people, our communities, and our planet. And that's how we're supercharging progress. At HCLTech, we provide technology services and solutions for some of the world's biggest companies. Yep, those ones, and loads more like them. By bringing together the best of technology with our people, we deliver an industry-leading portfolio that spans digital, engineering, cloud, AI, and software. All that good stuff. But it's not just what we do, it's how we do it. We're grounded in what we like to call the art of the possible, which is our poetic way of saying that we make sure you can deploy practical and transformational technology solutions at speed and scale. This is guided by 4 decades of our heritage in engineering. That's a lot of evolving technology. This rich experience helps us to continually adapt and create new tech services and solutions that are fundamentally intelligent, efficient, and business aligned, delivered by our people who are our true differentiators, not just in numbers, but in their ability to create value beyond the expected. And we have a lot of great people in a lot of different places. They collaborate and co-innovate round the clock around the world, day in and day out, working for new disruptors, as well as established Global 2000 companies. From financial services and manufacturing to retail and technology, from life sciences and healthcare to telecom and media and more, across every industry. As a partner of choice for these Global 2000 companies, we are consistently recognized by industry analysts for delivering
Good evening, everyone. Thank you for joining us for the... Yeah, sure. Oops, okay. Yeah. Good evening, everyone. Thank you for joining us for the third quarter earnings for HCLTech. We are joined by our CEO and MD, Mr. C. Vijay Kumar, our CFO, Shiv Walia, and Chief People Officer, Ram Sundarajan. And I'll now pass it on to Mr. Vijay Kumar to give you the commentary. CVK.
Yeah. Thank you, Ashu. Good evening, everyone. I wish all of you a very, very happy new year, and thank you for joining us today for our third quarter earnings announcement. Before we dive into our performance and results, I'm delighted to share that we are celebrating a momentous milestone. HCLTech marked 25 years since we were first publicly listed. Shiv Nadar, our founder and CEO at that time, when we got listed, he had said HCL Technologies is dedicated to building long-standing relationship with all our stakeholders and creating outstanding value for our shareholders. And what a journey it has been over the last 25 years. Our employee strength has grown from below 3,000 then to 220,755 as of 31st December 24. Our revenue has grown from $166 million in the year ending June 30th, 1999 to $13.8 billion in the last 12 months ending December 24, which is a CAGR of 18.9% over a 25-year period. Our annual profits have grown from $22 million in the year ending June 30th, 1999 to more than $2 billion in the last 12 months ending December 24, which is a CAGR of 19.4% over a 25-year period. And most importantly, we've delivered a TSR of 20.6% on a CAGR basis from the IPO till January 10th, 2024. And even more importantly, we also delivered the highest total shareholder return over the last 10 years among all the Tier 1 India headquartered IT companies and number one in cumulative TSR for the last 25 years. A remarkable achievement, and this is thanks to the support of our employees, our clients, our leadership, investors, and analysts like you. Thank you all. Now, coming to our performance in Q3, Q3 relative to the market has always been a strong quarter for us, and this is attributed to our business portfolio mix. I'm pleased to share that our revenues grew 3.8% sequentially and 4.1% on a year-on-year basis in constant currency. Our operating margin came in at 19.5%. Our services business grew 2.2% quarter on quarter and 4.9% year-on-year in constant currency. This was supported by IT and business services growing at 5.8% year-on-year and 1.5% QoQ. Our engineering and R&D services grew 1.1% year-on-year and 5.4% sequentially in constant currency. HCL software business grew 18.7% quarter on quarter, while declining 2.1% on a year-on-year basis in constant currency. Our current quarter EBIT percentage for HCL software business stood at 34.5%, which is an all-time high for HCL software. Coming to bookings, we won 12 deals, which include 7 deals from services and 5 deals from HCL software in this quarter, and the total new booking TCV for Q3 stands at $2.1 billion. We're also noticing average duration of signed deals is getting shorter, which means the tenure of the deals is coming down. The shift towards shorter tenure deals naturally leads to a moderated TCV, but the more important metric in this context is ACV, which is good. On a year-on-year basis, our ACV is up 9% quarter on quarter and 23% year-on-year. We're seeing a sizable number of deals influenced by AI and Gen AI. Some of our largest deals that we signed this quarter are enabled by AI-led transformation. Our pipeline continues to grow and remain strong. It's broad-based, and it is back on several deals led by our digital application business, engineering and R&D services, and digital process operations. Both Americas and Europe have seen a healthy growth in pipeline. This pipeline is near all-time high. The only other time we had the highest pipeline was the beginning of last financial year when we had a mega deal in the pipeline. In contrast to that, this time we don't have a mega deal of that nature, but we have a number of big deals across verticals and geographies and service lines, a really very robust and well-diversified pipeline. In terms of geographies, verticals, and client categories, Americas grew 6.2% year-on-year and 1.9% quarter-on-quarter. Europe grew 2.6% year-on-year and 3.5% QoQ in constant currency. The rest of the world remained flat on QoQ but grew 2.9% year-on-year on constant currency basis. As verticals, we had strong growth in technology, retail and CPG, and telecom and media during the quarter. We've added 2 clients in the $100 million category. We also added 4 in the $50 million category and 4 in the $20 million category on year-on-year basis. Our top 10 and top 20 clients continue to expand their business with HCLTech. Generative AI is getting more and more real. The cost of using an LLM or conversational models have dropped more than 85% since early 2023, making more use cases viable. We are witnessing an increase in momentum in data, AI, and Gen AI opportunities. AI force deployments and customer interactions in AI lab are increasing. Agentic AI is another big opportunity where we can enable our clients as they empower their employees and clients with more AI-led features. We've also received multiple analyst recognitions for AI and Gen AI solutions, including an endorsement from Technology Business Research of our AI Force platform, which underscores the impact that this platform is already creating. While our clients focus on strategic transformation with AI, Gen AI in high impact use cases, we are investing in repeatable horizontal and vertical solutions to really accelerate the adoption of high impact use cases. I had introduced Project Ascend in the last quarter, a project that steers our effort to further our operational efficiencies. I would like to report that Project Ascend is progressing well. Our teams are working at full speed to drive the priorities we have identified. We've also deployed 2 Gen AI-based solutions developed in-house to power our people function. There is a function, Talent Navigator, which augments internal and external fulfillment, and MentorBot, which provides highly personalized guidance and actionable steps for daily work situations. We continue to supercharge progress as the fastest growing top 10 IT services brand and continue to get recognized by media and analysts. We were recognized by Newsweek as one of America's most reliable companies 2025. We were also recognized by Forbes as one of world's best employers for the 5th consecutive year. We are the only India headquartered company in the professional services category to be among the global top 10 for 5 years in a row. We also received 125 plus leadership recognitions during the quarter that went by. Looking ahead in 2025, we believe clients are looking at increasing their IT investments. We do see an improvement in the demand environment with discretionary spending witnessing some uptick. They're investing to drive innovation and efficiency, and in these initiatives, Gen AI and data are at the center. While we are confident on the pace of medium-term recovery, bear in mind our Q4 outlook accounts for certain planned contractual reductions. On the positive side, small deals are getting converted quicker, while the large deals are taking a little more time to convert. With this, our updated guidance for financial year 25 is revenue growth of 4.5 to 5%, including the revenue from the acquisition of HPE CTG assets, which closed in the beginning of December. Our EBIT guidance continues to be 18 to 19%. And with that, I will hand over to Shiv to provide more granular details on our financial performance. Over to you, Shiv.
Thank you, CVK. Good evening and Happy New Year to all of you. Thank you for joining our Q3 Financial Year 25 earnings call. Let me walk you through our financial performance for the quarter. Starting with the revenue performance. Total revenue for the quarter is rupees 29,890 crores, which is a growth of 3.6% quarter on quarter and 5.1% on a year-on-year basis. Coming to the services side, services revenue came in at rupees 26,601 crores, which is a growth of 2% quarter on quarter and 5.9% on a year-on-year basis. Software revenue for the quarter came in at rupees 3,386 crores, which is a growth of 18.2% quarter on quarter and a degrowth of 1% on a year-on-year basis. Moving on to the profitability matrices, our EBIT came in at rupees 5,821 crores at 19.5% of revenue, up 93 basis points quarter on quarter. Our EBIT increased by 8.6% quarter on quarter and grew 3.7% on a year-on-year basis. Net income for the quarter is rupees 4,591 crores at 15.4% of revenue. We are pleased to note that this is our highest ever EBIT and net income in a quarter. I would also like to spend a minute on our return on invested capital, ROIC. Our ROIC continues to improve thanks to our ongoing focus on profitability and efficient capital management. The last 12 months ROIC is at 36.6% for the company, up 385 basis points year on year, and services ROIC now is at 44.7%, up 455 basis points year on year. Software continued to improve with ROIC at 18%, up 160 basis points year on year. Cash generation is another highlight I would like to focus your attention on. Our cash generation remains very strong. Over the last 12 months, operating cash flow reached at rupees 23,836 crores, while free cash flow generation was at 22,701 crores. Our balance sheet remains strong with a gross cash at 30,010 crores and net cash at rupees 27,707 crores. Operating cash flow to net income conversion is healthy at 141%, and free cash flow to net income conversion is at 134%. This cash generation has improved on the back of our improved DSO. Our total DSO, including unbilled DSO, is currently at 77 days, a 2 days improvement quarter on quarter, and 9 days improvement year on year basis. This is our best ever DSO performance in the recent years. Now for the shareholders, our diluted EPS for the last 12 months came in at INR 62.91, which is up 8.7% year on year. The board has declared an interim dividend of INR 12 per share for the quarter, and also on the occasion of completing 25 years of listing, the board had announced an additional dividend of rupees 6 per share. This means that total dividend payout for this quarter is INR 18 per share. The record date is 17th of January 25, and the payment date of the same shall be 24th of January 25. That brings our 12 months payout at INR 60 per share, effectively distributing 95.2% of our net income. That's all for my side, and I will now hand it over to Ram for HR update. Over to you, Ram. Thank you.
Thank you, Shiv. Good evening, everybody. I'll also join CVK and Shiv in wishing you all a very happy new year. In the opening commentary, CVK has already talked about how we have grown over 25 years and the December quarter ending headcount of 220,755. That's a net addition of 2,134, a 1% increase quarter on quarter. During this quarter, we also added more than 2,000 freshers. That takes the tally for the year to 6,000. So that's in line with what we had planned for H2. We probably will add 1,000 more in Q4. Insofar as fresher planning for next year is concerned, we expect to significantly increase the numbers next year. So that's a plan, and that's on the back of the strong pipeline that CVK was referring to. Attrition for the quarter, December quarter, is at 13.2%. For the last 5 quarters, you would see the attrition has been in the similar 12.8 to 13.2. That's where we expect the attrition to stabilize. We project to close this fiscal around this 13.2% range for us attrition is concerned. I'll probably stop here. Maybe we'll open the floor for questions and take questions from the floor.
Hello. Yeah. Good evening. This is Annapurna from the Economic Times. Could you firstly elaborate a bit more on the optimism driving the outlook, and especially in the context of the new US regime coming in this month? How do you see the demand evolving this year? Secondly, and related to that, do you expect any policy changes to be impacting the Indian IT sector? Secondly, attrition has increased. How do you see that affecting margins and growth going forward? And thirdly, in terms of hiring this year, for this calendar year, or for FY26, do you have any specific plans that you can share?
Yeah, I think the first question was on demand environment. We have seen, actually last quarter we did call out that there is some pickup in demand in financial services, and there is some green shoots in the tech vertical. And that's what has really played out. If you see, our financial services has grown sequentially as well, and year on year is declined due to that divestment impact. And similarly, tech vertical also has grown. Overall, across verticals, we are seeing a continuing improvement from what we saw from the last quarter. And that's also reflected in the services growth that we've had, which is 2.2%, which has a little impact from CTG acquisition, but it's a healthy growth. Now, it's quite possible that the global business environment, there could be a lot of changes in the next few days or next coming quarters. But how that will change the spending environment and the client priorities is something we do not have any insights into at this time. But we largely think our business impact will be BAU, at least from any immigration-related topics, because we are very less dependent on H-1B visas. But other things could impact our clients, it could impact us. That's not something which we have factored in or planned for at this time. And Ram, you can answer the next question.
A couple of other questions on attrition and hiring. So attrition, as I said, LTM this quarter, 13.2, it's about 30-40 BPS higher than last 4 quarters. We've been about 12.8, 12.9, which is still within the narrow band. If you compare the attrition levels to FY23, 22, it's significantly lower. As I said, we expect to close this year at the similar levels, so which isn't going to have any negative effect in terms of our ability to fulfill and grow. In any case, we have ramped up our hiring engine as well. Again, last 4 quarters, if I look at, we've been able to consistently meet the demand through our hiring efforts. So that will continue. We don't expect any slack in that.
Hi, everyone. One more question. You mentioned that you've seen the highest ever EBIT and net income in the quarter this quarter. What exactly was behind that? Especially given that we're coming out of a weaker global demand environment.
So effectively that, the continuous revenue growth over the period, and EBIT came in at the good EBIT performance as well as the margin, net margin improvement. It's driven by the revenue growth which we have been seeing over the period.
Hi everyone, Shivani here from CNBC TV 18. So I have a 2-part question. First is that there's a slight miss on revenue versus the analyst expectation. How was the quarter in line, in line with was it in line with your expectations, or was there a miss on that count? Second, what was the impact of the wage hikes on margins this quarter?
Yeah, I'll talk about the revenue and then Shiv will respond on the margins. The overall revenue on the services side, we did slightly better than our expectations. On the software side, we did less than our expectations. So I think overall, I would say it was the overall revenue was in line with our expectations. There was a little bit of higher revenue from services and lower revenue from software. That's the response, and maybe Shiv can provide the wage hike impact.
Yeah, so wage hike impact, when we had a meeting last quarter, we announced that 65 to 80 basis point impact we were expecting in this quarter. So in this quarter actually came in at 80 basis point impact of the wage hike on our margins.
So now we'll take questions from, our friends from media who've joined us virtually. Nitin, over to you.
Thank you, Ashutosh. For our virtual attendees, please follow these instructions. If you're using the WebEx mobile app, tap the three dots on the floating panel at the bottom of your screen and then select the raise hand icon. If you are on a computer and want to ask a question, click the raise hand icon at the bottom right of the participant panel and we will unmute your line. If you joined via audio only, press star and 3 and raise your hand. Our first question today is from Jas Pardia from the Mint. Just please go ahead and ask your question.
First off, you did mention that discretionary spends are expected to pick up. Now, I just want to understand the December quarter growth. If I look at the dollar figures, it's been the slowest since 2019 on a sequential basis. What explains this? Considering a peer of yours did not report a very happy report card in terms of revenue growth. Second, if I look at the smaller clients, that is those getting more than 20 billion, 10 million and 5 million, that number seems to have come down. What explains this? That's about it. Thank you.
Yeah. On the first question on the revenue growth, usually we have a strong revenue growth in this quarter, and if you see 3.8% revenue growth in the current environment is a very, very impressive growth. When you compare it to previous years, there can be a lot of variables. It also depends on how the jazz performance was, and then O&D follows jazz, so there can be some comparisons which could be different for different years. But one notable thing is our software performance this quarter was below our own expectations. So you see a year-on-year decline of 2+% in the software business. So I think that is the only difference. Otherwise, I think our performance is in line with our expectations for this quarter.
And Civic, on the second question, this quarter the dollar appreciated against other currencies, and that's why that has impacted some of the 5 to 10 million kind of customers categories.
Our next question is from Debangana from Money Control. Debangana, please go ahead and ask your question.
Hi, am I audible?
Yes, loud and clear.
Hi. CVK, I wanted to understand if you could shed some light on the kind of Gen AI deal pipeline that if you are looking at, if you could share some of the deals there, what's the deal pipeline like, if you could give an estimation of how the revenue contribution is playing around. And also to Ram, on the wage hike cycle, you said 80 basis point impact in this quarter. Is the wage hike cycle over? Are you expecting a spillover effect in the upcoming quarter as well?
Yeah, so let me respond to your first question on the Gen AI deal pipeline. So if you look at our the booking performance this quarter, we did $2.1 billion. A very large part of that has something or other related to generative AI embedded in it. Today, any pursuit that we undertake, we build in AI Force, we build in AI Foundry, and some of the tool sets which really help in very effectively solutioning for the client requirements. And we are not specifically calling out what is the generative AI pipeline and what is the generative AI booking and revenues. I think it's a highly intertwined with every aspect of our business. We have a plan to infuse AI and generative AI across all the services that we deliver, which is what we call a service transformation program. And our goal is to roll it out to 100 clients by end of FY26. We're already 20 plus clients are already leveraging the AI Force platform. So that's pretty much what I can share with you at this time.
So wage hikes, 85% of our people will go through the wage hike in the O&D cycle. So that's what Shiv was referring to, the 80 BPS impact in margin this quarter. We will have our mid-management and senior management staff see the wage hikes in the current quarter, the JFM quarter. We already projected the impact for that around 50 to 60 BPS. So there will be some follow through in this quarter as well.
Thank you, Ram. Our next question is from Rukmini Rao from Fortune India. Rukmini, please go ahead and ask a question. Rukmini?
Hello. Okay. CVK, hi. Thank you for taking this question. If we are to look at the top client percentage of revenue, CVK, I was seeing that the numbers are closer to December 21 figures, where perhaps, we were looking at some of the best, where perhaps top 10 client was about 29.4% of your revenue. So you're getting back to the 21 December kind of numbers. Can you help us understand, the wave of dip that you saw in the 2 years and now the revenue picking up? What has led, or what kind of work has come back from these clients, or is this incremental engagement that has happened, CVK?
Thank you for that question, Rukmini. I think looking at the percentage of revenue from the clients from 2 years ago to now, and if you find it comparable, that means our top clients have also grown at the same rate as our business has grown. So I think there's nothing to read into it. I mean, basically, we are growing at a healthy rate in our top clients. And if you look at this quarter, if you don't look at the percentage contribution to the revenue, but look at what is the growth that we are seeing in the top 5 clients and top 10 clients and top 20 clients. Both top 10 and top 20 clients have grown sequentially on an LTM YOY basis this quarter. So I think it's a positive thing that our top clients are also growing, at least at the company level, or even faster in some categories.
Thank you, CVK. Our next question is from Padmini from Financial Express. Padmini, please go ahead and ask a question.
Good evening. So, did IT and business services margin decline because of wage hike impact? And how much of your margin boost was because of dollar appreciation? And are your clients demanding that productivity improvements enabled by various GenAI tools be directly translated into cost savings? For example, maybe by reducing project team sizes or durations of GenAI's capabilities, and if it is leading to reduced deal values despite potential higher per hour rates.
So
First part of it you can.
margins. On the margins, on sequential basis dropped by 22 basis point. And we gain through Project Ascent productivity improvement around 100 basis point. And that got offset by approximately 80 basis point impact of wage hike. And the furloughs came in approximately 40 basis point in this quarter. And another 15 basis point impact of CTG acquisition, integration related cost, as well as acquisition which came in. So net, that's how the maths comes to around 22% basis point decline sequentially. And 18 basis point was the benefit on account of Forex movement in this quarter.
Yeah, and coming to the productivity benefits that our clients are asking for, normally we have certain committed productivity benefits as a part of long-term contracts. Now, obviously, some of that did not factor in generative AI, but clients are also are looking at adopting this in a thoughtful way, because you cannot deploy generative AI for across the entire estate. You needed to do it in a gradual manner. you needed to look at what the outcomes are and then continue to scale it in a calibrated way. So it's really about jointly working with the clients to look at what is the art of the possible. And eventually, if we are able to deliver a significant savings, then we will have a conversation with our clients and on how that should be shared. At this point, we are not seeing any reductions due to this.
Padmini has a follow-up question, CVK.
Just one more question. Are contract renewals becoming more challenging because are your clients seeking expanded project scopes at the same price or same scopes at reduced values? Is there a pricing pressure there?
I think the dynamics are whatever BAU dynamics which are there, and we really have a very high client satisfaction. Our renewal rates have been excellent over the years, and it continues to be so. Obviously, there will be certain business dynamics, competitive dynamics when big renewals come into play, and we've generally handled it well, and it's BAU. There's nothing too special to call out at this time.
Thank you, CVK. Our next question is from Ronindra Singh from the Hindu Business Line. Ronindra, please go ahead and ask your question.
Hi, CVK and team. I had a question on the rupee depreciation CVK, since it is depreciating heavily. So what kind of impact do you see going forward? You're talking about H-1B visa in the US. How many employees do you have now? And is there any hiring plan? Can you give me some outlook on that? Thank you.
Yeah, the dollar depreciation, maybe Shiv, you can answer, and then Ram.
So, yeah, it will have some impact because we do have some large cost based out of India. But it's a bit unpredictable, how it's going to move. But yes, we did see some benefit in last quarter also, as I mentioned, 18 basis points. So that's what I can say. I think it's very difficult to predict currency at this stage. Yeah, beyond that, that's.
So US, about 80% of our people in the US are all local. So our dependence on H-1B is one of the least in the industry. And it's not just now. If I look back over the last 4 odd years, we've been pretty locally self-sufficient. And that reflects in the number of H-1Bs that we go through every year. It ranges between about 500 to 1,000 in a year max. So it's minimal dependence.
Thank you, Ram. Our next question is from Haripriya Sureban from the NDTV Profit team. Haripriya, please go ahead and ask a question.
I wanted to understand a little bit more about the margin profile. Like the guidance that you've provided has been the same. So in the long term, what's the kind of aspirational margin level that you're looking to get at, and what kind of levels would you have going forward?
So we have given the guidance of 18 to 19% for this year. I think that's what I would say is our guidance for this year. And we'll when we do the guidance for next year, then we'll discuss and give the guidance for next year. But at this stage, it's 18% to 19% for this year.
Thank you, Shiv. Our next question is from Haripriya Suresh from the Reuters. Haripriya, please go ahead and ask a question.
Questions. CVK, one, I wanted to understand what the factors were behind the guidance being narrowed, and if you've got any clarity on what client budgets will look like for the 2025 calendar year. And Ram, I know you talked about fresher hiring will be significantly higher next year, but do you have any target in mind that you'd like to share? Yeah, thank you.
Yeah, on the guidance to be narrowed, if you look at last quarter, we had given 3.5 to 5% as a guidance, and the midpoint of that would be 4.25. And we have now 3 quarters are over. We have only 1 quarter remaining, So we kept the same midpoint, 4.25, and narrowed the band between 4.75 would be the midpoint. I mean, 4.5 to 4.5 to 5 is a new guidance, so the midpoint will be 4.75. Of course, this includes the acquisition impact. The organic growth will be about roughly 50 basis points below that.
I think the next question was on freshers. Our next year plans, we typically finalize our plans during this quarter. Q4 is when we finalize the plans for the next fiscal. The early indication, as I said, we expect to be hiring more in FY26 compared to FY25. So that's the early indication. Another important thing is, as I said last quarter, increasingly freshers, we're going to focus more on specialization. Numbers are important. We plan the numbers based on the business forecast that we have, which we will sort of review quarter on quarter. We'll continue to focus on specialization. That's going to be our approach.
Thank you, Shiv. Our next question is from Beena Parmar from the Economic Times. Beena, please go ahead and ask a question.
One is on the software side, you mentioned that it was less than your expectations, the growth. Could you give us the reasons behind it? What really didn't work out? And secondly, I think you mentioned about fresher hiring. You've hired, just wanted clarity on the numbers. You mentioned it was 6,000 so far that have been hired, and a target is, I think, around 10,000. And you said probably you are hiring around 1,000 more in the next quarter. So not sure if the math adds up. Can you just give clarity on what kind of number you're looking at to close by Q4?
Yeah, on the software, as you would already know that a lot of things happen in the last few days of the quarter, especially in the December quarter. And so some renewals did not happen, and some new deals also, the decisions did not happen, and that contributed to the reduction in revenue. And on the freshers, Ram will provide a color.
So I think the reference to 10,000 is something that I think it's from the beginning of the fiscal, which we gave as a directional guidance. See, the annual plan for freshers is going to remain directional. We will have to review our plans quarter on quarter. For this fiscal H1, we did about 4,000. This quarter, we added about 2,014. So that's what I referred to as 6,000 year to date this fiscal, and we probably will add another 1,000. So that will all add up to about 7,000. As I said last quarter, we did moderate the fresher numbers for this year. That's down to two things. One, some of the productivity initiatives that we are driving within the organization. CVK referred to Project Ascend. Shiv was making reference to 100 BPS benefit from the project. So there are efficiency measures and productivity measures that we are driving as a business. So that's going to play a part in how we moderate our fresher numbers each quarter. Plus, again, attrition, if you look at, that's the reason I made reference to attrition over the last 3-4 quarters, 12.8, 12.9% is what it has been. So lower attrition, improved productivity results in moderating the fresher numbers for the year.
Thank you, Ram. And with that was the last question of the evening. For all the unanswered questions, requested to please write to us and we'll get back to you. With this, we will now be concluding the press conference. Thank you everyone for your valuable time and presence. Please note that the recording of this webcast will be available on the HCLTech website. Stay safe and take care. Thank you so much.
Thank you, CVK, Shiv.
Thank you.
Thank you, everyone.
Thank you.